आपके सिर्फ आपके स्क्रीन पे देखो एक बार। सिर्फ
You are tested, sir,
Has
right
it
now?
been, has it been only enabled for me? Can you make it enabled for Sarish?
Yeah, I'll make it open for everyone, sir.
Yeah, please.
Just a minute. Bireshwar, sir, the sharing is put on. Any of you can share the PPT on that if you want. We're tested now. PPT is visible, sir.
Okay, okay. So what we will do, have we gone live?
Another 5 seconds, sir.
So should we, Mr. Suresh, should we first run through the PPT and then look at the questions which were given to us?
Yeah. First, sir, I will. Anyhow, Mr. Stephen will introduce me. Then
Okay.
I will give you a prelude to the whole session. Okay.
Sure.
That is the normal thing. Then you can take over and start exhibiting the PowerPoint. Okay.
Okay.
You,
Yeah.
you can go through the subject and present. And once it is over, we will go through the question and answers. Okay.
Sure. Fine.
Yeah, that is the model which we will follow, sir. No problem.
Sure.
Fine, sir. We are going live, sir. Good evening, everyone, and welcome to once again to ANMI's webinar. Today, ANMI has got a special webinar, which is in association with NSE on a very interesting topic. That is brokers' institutional mechanism for prevention and detection of fraud or market abuse. I know many of them have many questions because during the registration time also we have received many questions from our members, and I'm sure today's guest speaker will definitely clarify every doubts and every issues that people think that they wanted the answer for. Today we also have uh, Mr. K. Suresh, who's the alternate president of ANMI. In another 2 months, he will be the national president of the ANMI. Okay, to introduce Mr. Suresh, I have a few words to speak about him. One is uh, he's been the assistant divisional manager of United New India Insurance, and Mr. Suresh is associated with the Chartered Accounts of India, an associate member of Institute of Company Secretaries of India, fellow members of Insurance Institute of India, and more than 30 years of experience in finance, securities market, accounts, internal audit, and marketing. Along with it, he's been the vice president of Apple Credit Corporation Limited, finance controller and company secretary, India Cements Capital Limited, senior general manager, the New Indian Express, president and CEO of Indian Cements Capital Limited, director of India Cements Investment Services Limited, ex-honorary secretary of Madras Management Association, past president of Hindustan Chamber of Commerce, past president and director of ANMI, Association of National Exchanges Members of India, ex-member of Management Council of Madras Chamber of Commerce and Industry, ex-member of Secondary Market Advisory Committee, SMAC, ex-treasurer, Tamil Nadu Travel Mart, ex-member of Divisional Railway Users Consultative Committee, Chennai, member of governing body of Vidyoda Schools, trustee of Tamil Nadu Foundation. He's always appear on TV channels with regarding to shows of securities market, and he's also attended general debates on this particular topic. And he's very fond of music, reading, and for all your information, he's also a Tamil poet. Welcome to the webinar. Good evening, sir. Over to you.
Yeah, thank you, Stephen, for your what's called elaborate introduction of me. Today, actually, I should welcome every one of you on behalf of ANMI. It is a webinar for discussing the institutional guidelines for prevention of fraud or market abuse. It's a well-known fact that there will be a mole in every setup. There will be a fraud in every business entities. So we don't know what is going on. So sometimes in the midst of our routine transactions, we may miss the important issues, rather such happenings which we may not be knowing it. So it becomes necessary from various points of view of government and other agencies, SEBI and the exchanges. It becomes necessary for brokers while carrying out their instructions or while carrying out the trade, in case they come across any fraud or market abuse, it becomes necessary to report or identify and report. Please understand that this is not a new thing. Already SEBI issued the circular in July 2024, where it had directed the stockbrokers with more than 50,000 active unique client codes to comply with from January 1, that is 1st January 2025. Now SEBI is thinking of implementing it in phased manner to the rest of the brokers also, depending upon their client size. So please understand the frauds which you may encounter is maybe trade appears to be from mole account or creating false impressions of artificial demand for a script, indicate price manipulation, front running, insider trading, circular trading, or bump and dump. So various activities are there actually happening, which we may not be knowing it in the midst. So there must be a system. So institutional of rather you have to have a proper system in your front end and back end everywhere to give you the alarm or give you the alert of such events. So that's why today we are having this great webinar where we should thank our NSE team who have come, who are ready to present the various things, what they are having in mind for your guidance and implementation. So please have your own attentive session today and any questions also. Already, I think we received some questions. You can post the questions also on the chat box or wherever you feel, so that whatever possible within the available limited time, we will try to address your queries or your apprehensions regarding this matter. Thank you, sir. Please over to Mr. Chatterjee of NSE, Vice President NSE, sir. Please.
Thank you, Suresh, for those opening words. I would like to inform our guest speaker today and the members also. Today, we have received registration more than 250. And we have received registration from 20 cities and about more than 90 companies, 90 entities have joined us today. Among them are the MDs and CEOs and directors and compliance officers. We have CSs who have joined in. To introduce our guest speaker today, Mr. Bireshwar Chatterjee, Vice President, Surveillance and Investigation, NSC, has come along with his team today to edify us regarding the said subject. Mr. Bireshwar, welcome to our webinar, and over to you, sir.
Yeah, thanks for the opportunity. So, good evening, members. So this particular webinar was quite important because there is this important circular which has come, a guidance note on the institutional mechanism for prevention, detection of fraud and market abuse practices. As we already know that there has been a circular earlier by NSE, which had detailed out the obligations of the trading member with respect to surveillance, and that was a quite old circular and it was revised 2 years back. So that circular also says that to start with, the members should have a surveillance policy. That's very essential. So the surveillance policy will be according to the size of the members, and there are various obligations that is listed out in that circular. Now, taking this forward, SEBI had come with a circular in July last year. So in that particular circular, which we'll detail out in our presentation, the idea was that now surveillance has to be a proper function in each and every trading members at the trading members place. So it is just hold on, just hold on. Sorry for the disruption. So SEBI came across with this particular circular, where now this is a proper SEBI circular which is necessitating a surveillance mechanism at the trading member end. So the idea being that surveillance is such an important necessary function. Now that has been earlier with the exchange with SEBI, where we all do surveillance, we have proper mechanisms, systems, teams in place. But now this is extended to the trading members team also. The idea is that at various levels, from SEBI to the exchange to the trading member, we all should try in a very structured manner, have various alerts in place. The idea is that we should all get together, and as far as possible, we should have alerts in place so that we can actually stop, as far as possible, the various market abuse practices that are there in the market. And this is a particular structure that is defined, but at every trading member's end, the members should have various various size and shapes of the surveillance mechanism, because the size cannot be one fit for all, because there are various trading members of various sizes. So these are the principles that has been spelled out in the circular. Based on these principles, each and every trading member at their end, because trading members are more close to the market, they are on the trading side very close, and they are very close to the clients also. They are dealing with the clients every day. So they are in a better positions to understand that at a trading member level, what can be the various data points, or what can be the various red flag indicators which will point out to various market abuse practices. So idea is that to spread out right from SEBI to the exchange to the members, idea being that we should all put our best foot forward in actually making sure that we deal with the market abuse practices, and this is good for all of us. So not only exchange SEBI, but also the members, so that the cleaner the market, the more the trust in the market, and therefore the more participation from the investors. So that's the prelude. I have with me Suresh, my colleague. So he will run through the particular circular and the various points that we want to say in the circular, and then we'll take up the questions. So, Suresh.
Okay, thank you, sir. So I'll just run through the various aspects of the circular which we had issued on 31st of December, and also briefly touch upon the circular which was there in force prior to issuance of this, which is the 1st July 2021 48818 circular. So, yeah. So the background of issuance of this guidance note was a circular issued by SEBI on 4th of July, which advised the exchanges and the broker ISF for framework forum to recommend best practices to be.
I'll just sorry. Sarish, I'll just add one more point here, that this circular came in July. Post this circular, as SEBI advised us to have consultation with ISF of the brokers, that's a broker body. So we had detailed consultations with ISF. All the points which ISF recommended were taken into account, and we had sent this entire consolidated recommendation to SEBI. SEBI has actually come back with their observations on the recommendations, and this guidance note is a culmination of whatever was acceptable to SEBI and the exchange, and that's how this has come out. So it has been almost 6 months of consultation with the brokers, the ISF, the broking body, and therefore this has now come out after all such consultations. Now, further, if members have further recommendations, always they can follow the ISF route. They can bring various recommendations again through the ISF route, and we will be forwarding those recommendation against to the SEBI, again to SEBI. And if SEBI is agreeable, then of course we will have this guidance note amended to that effect. So, Suresh, please continue.
Yeah. So the objectives of the guidance note were to recommend best practices to be adopted by trading members for effective trade surveillance. Uh, Description to be provided with respect to the common types of market abuse practices and what are factors need to be considered for identifying them, right from alert generation to reviewing of alerts, and also provide an accountability matrix for the different types of suspicious behavior. Accordingly, the guidance note, which has been issued on 31st of December, it contains an indicative list of the most common market abuse practices along with some uh, parameters which have to be considered at the time of alert generation and the processing of these alerts. The indicative list of entities who should be surveyed. What all controls you need to have for the various entities, both internal and external, and the consequence accountability metrics, which is to be considered when there is any escalation. So, like I mentioned, the circular which was in effect prior to this is the 48818 of July 1st, 2021, which clearly mentioned the obligation to frame a board approved surveillance policy, board or the apex body approved surveillance policy. There was a requirement for generation of surveillance alerts at the trading members end, while thresholds were not prescribed for any alert generation, but indicative themes or broad guidelines were prescribed for what sort of themes the alert should be based. There were some prescribed requirements with request to client due diligence and processing of alerts. A new thing which got introduced there was a quarterly reporting mechanism on the member surveillance dashboard, wherein you have to give the number of alerts which you have generated, only the summary, what all actions you took. That was also there in that, and it also touched upon disciplinary action in case of non-fulfillment of surveillance obligation. So some of it you will find it in this circular also. So the first aspect of the guidance note was the board's approved surveillance policy. So there's no change in what was mentioned in the earlier circular. The new aspect was that human resources, which require to dedicated surveillance team, that has been prescribed here, and it has been categorized into four types of trading members based on the active UCC which the trading member has. So it will range from small trading members who are categorized as small, that is active UCCs less than 2,000. The second category was medium, active UCC between 2,000 and 50,000, and large 50,000 greater than 50,000, but who are not categorized as QSB. And last is huge, which is the QSB. So when it comes to having a dedicated team, so if you see at the first category, any principal officer, designated director, or compliance officer, as applicable for the trading business trading members business model, they can handle additionally the surveillance activity. So there's no specific requirement of having separate surveillance officer. When it comes to medium, large, and huge, there is a specific requirement of having a separate surveillance department within the trading member. Second requirement is that when it comes to medium, although you have a separate surveillance department within the TM, but any of the principal officer, designated director, or compliance officer can additionally handle the role of head of surveillance. And all mid and senior level team members should have relevant certification from NISM. The modules which are there for surveillance, they should have that modules passed. When it comes to large and huge, the only change here is in addition to medium, now you need to have a specific chief surveillance officer, which you can appoint any of the principal officer, designated director, or compliance officer. That you can designate them as chief surveillance officer. The surveillance team should be adequately staffed with regards to the number of alerts you are expecting to generate. So it should be adequately staffed to handle both the alerts which are generated by the exchange and also which your surveillance system whether in-house or vendor-based, that is going to generate. Here also, all mid and senior level members from the surveillance team have to have that mandatory certification from NSEIL. Now, when it comes to system for alert generation, in the first category, there's no specific requirement for having a system in place. If they want, they can have. So they can also have a manual process for alert generation when it comes to trading members who have UCCs less than 2,000. In the other three categories, it is mandated to have a alert generation system. This system can either be developed in-house or vendor-based. So one thing, there was also a requirement of having a framework for empanelment of surveillance system vendors. So Exchange is in the process of issuing the circular, so it is already in process, and that is expected to be issued soon. The next aspect was with respect to client screening and due diligence. Here, since it is an integral aspect, the client onboarding, so it is the same requirement across all the categories, which is first is KYC norms need to be adhered. There should be compliance with whatever requirements KRA have. There is a SEBI master circular which, with respect to anti-money laundering, those provisions have to be complied with. And there is a statutory PMLA Act, so those requirements also have to be complied. This is uniform across all the four categories of trading members. There is a indicative type of list of alert which has been prescribed for all types of trading members. So it is starting from identifying client or a group of clients who are accounting for a significant percentage of the trading volume in a script. Second will be where you are having a new account or a dormant account which has suddenly got activated, and that is heavy trading, that is significant value of trading or a percentage of total trading activity in the script, that is observed. Next alert is based on, again, client and group of clients which are dealing frequently in small quantities. Here also it is subjective in the sense what type of scripts they are trading, those all factors have to be considered. There is a alert with respect to trading activity, which is not commensurate with the reported income or net worth. So that is the next theme on which alerts have to be based. Frequent changes in KYCs. So the compulsory attributes which are there, if there are frequent changes, that is also to be considered as a red flag. And wherever the last is with respect to insider trading norms, where if you find that there are clients who's trading in such a way that it can be attributed to trading on the basis of UPSI, unpublished price sensitive information. These are all based on patterns and the type of orders when they are placing the orders. If is there any pattern you can identify. So these broad themes are prescribed for all types of trading members. Continuing with, there is an exchange framework, surveillance framework with respect to unsolicited SMSs, where you have this unsolicited SMSs or YouTube references floating in a particular script, and based on a criteria, we are shortlisting scripts and disseminating on our website in two types of list. First is information list, which is sort of under watch, and watch list, which has a surveillance action with regard to withholding of payout. So those scripts have list of scripts you have to comply with and follow what all is expected. Second is the circular which we issued in 2019, which was a guidance note with respect to abnormal and non-genuine trades. Here also, the broad themes which were mentioned there is consistency in profit and loss, or both at client and group level. Anything which you feel that it is not genuine, all gets covered here. Next theme is where script a client is pledging a share, and then subsequently you observe in the same script he has got a significant trading activity in this. The next is where orders are being placed by AP, and you have to monitor here whether it is in line with the KYC which he has submitted. Last but not the least is identifying synchronized or coordinated trading, where you find that multiple clients at the same time are giving similar sort of orders. So those sort of alerts are recommended here. One type of alert which is mandatory for trading members who are offering internet-based facility is monitoring of IP addresses from where the orders are getting placed. Now, the review of alert is both for the exchange generated alerts and your alerts. So when it comes to point 2 and 3, point 1 and 2, exchange since 2013 has been downloading transactional alerts. So these alerts have to be reviewed by you within the deadline. And as far as the alerts which the trading member are generating on their own, those have to be reviewed at least once a year with respect to what the generation parameters are, if they are still working properly or it needs a review. So those sort of aspects are getting covered in the obligation with respect to review of alerts. There's one more circular in place which refers to the enhanced obligations based on QSBs. So those obligations are also being reproduced in this circular. So the aspects, the obligations with respect to clients having a higher paying obligation compared to reported income or net worth, where multiple clients are having common mobile number or common email IDs. Similarly, many unrelated clients are having common devices. So whatever is allowed under related clients is allowed, but this is specifically referring to unrelated clients where you are not able to identify that they are a part of the same family or something for that on that those grounds. With regards to options, there's an obligation to monitor client activity in away strikes, deep OTM contracts, and also where you find that there are certain clients who are continuously incurring losses. This is not an alert of second last one, but there should be regular campaigns with respect to password sharing. The last one is where there's a repeated instance of delivery default by clients. Uh, the next one is with respect to the client onboarding process, whether everything is in proper from a KYC compliance perspective.
कोई प्रॉब्लम मेरे को प्रॉब्लम नहीं है मैं भेज देता हूँ हम बाद में से भी देखते हैं
Okay. There should be regular interaction with retail clients who are trading only in operations from a product suitability perspective. And also, there should be alerts which look at patterns like pump and dump. That is, the trading activity is also you can attribute that there is a price rise in the script. Clients who are placing large orders, but they are canceling it, or they are placing in such a fashion that it will remain unexecuted. This alerts are to be considered. Order spoofing is nothing but you have got large orders on one side of the order book, which is getting placed. They are trying to influence the order book, reduce the spread, and you also find that you get orders on both sides. There's a very large buy order, there's a small sell order on the other side, and this large order gets cancelled. So those sort of patterns are being considered for order spoofing. Next one would be respect to client concentration in a script with respect to exchange volumes. Circular trading and reversal pattern is where you find that within your own clients they are trading amongst themselves in a particular script, or two particular clients are trading in such a fashion that they are reversing it, and it's a non-genuine trade. Front running is where you find that if you are handling orders of big clients, and there are some internal orders which are getting placed prior to that, every time the large order is getting placed. So those sort of patterns are being looked for identifying front running. And the last is just summarization that all compliance with respect to the 2021 circular has to be complied. Like we have for deep OTM, there should be one alert which looks at trading activity in long-dated option contracts. Whether there are any clients who are only trading in scripts which are under surveillance frameworks like ASM, GSM, or where you find unsolicited messages have been floating in the social media, and there should be some alert which also looks at position limits. Whether there is any particular client who is or client or a group of client who is taking substantial portion of the open interest in a particular commodity or contract. The alert thresholds have to be clearly documented in the surveillance policy, and it should be decided by the principal officer, designated director, or whoever has been appointed for this function. And this review, like mentioned earlier, has to be done at least once a year, and it has to be submitted along with a review report to the apex body. Now, based on the themes which we had mentioned in the previous slides, there have been some factors which have been given here, which can be considered for generating alerts. For example, if you look at the first type, client or group of client has a large traded volume in a particular script. So what can be the factors which can be considered for alert generation? First is the volume of this client is a certain percentage. The threshold is not prescribed, so it can be decided by the trading member as they deem fit. Second is, in addition to daily volume, they can also have a volume which looks at the average volume in the of 30 days, say 30 days in the script. This is for QSDs. Second is where it is in contracts. So first was cash segment, second was derivatives contract. So here also we have a percentage of daily volume and volume as a percentage of the last 30-day average. Third is with respect to scripts, which are illiquid. And you find that there are particular clients or set of clients who only trades in such scripts. So there you need to monitor the frequency. Fourth and fifth are related to pay-in obligations and margin obligations. So if they are breaching beyond a certain threshold of the reported income network, then that is one of the. Frequent changes in a KYC is a trigger for identifying potential mule accounts, whether email ID or mobile. You get frequent requests for changes, then that is one red flag which you can consider for devising alerts to identify mule accounts. Seventh is where you have got scripts which are in which you have got this unsolicited SMS and YouTube references floating in the social media, and exchanges also shortlisted the scripts either in the under watch list, which is for information, and the shortlisted list, current watch list. And if there's a particular client who is trading beyond say X amount, or that threshold is left to the trading member, so they are trading only in such scripts, and that is one alert which you could devise. The next one is related to the losses or profits, which have been beyond it X times of the reported income network. So that is one alert. There was an obligation to identify, monitor IPs. So if there are more than X clients who are trading from the same IP, then that is one trigger for generating an alert. Next is with respect to failure in delivery of pay-in obligations. So that is also, if you find that it is more than X times in a month, that is one factor basis which you can devise an alert. If multiple alerts are onboarded online from the same device, so that is one trigger which you can create for grouping. So that is one parameter which you could consider for grouping of these clients. Next is circular or reversal pattern, where you have this. First one where you find that the clients are trading amongst themselves in a particular script, and the second is where you have buyer and seller in one leg, and it reverses in the second leg, and there is a substantial change in the traded price without any justified logic. So that, based on a profit or loss thresholds, you could devise a letter. Front running is nothing but, like I mentioned earlier, if you are handling large orders or big clients. So if you are finding that consistently you have another client placing orders in such fashion that it is always preceding the large buy order and then selling subsequent to the order. So this is the typical pattern. And if there's a lot of repetition at say dealer level or at security level, then that could be one trigger for generating alerts for front running. And last is where you have got substantial market open interest, which can be attributed to trading activities or positions taken off your internal clients. So you can have fixed thresholds if they are beyond an X percent in a contract or say. So that can be considered for generation of alert. Now, once you have generated alerts, what all factors need to be assessed while reviewing it? So that is given in the second column. So first type of activity or the type of market abuse, we can say, frame it that way, is creation of misleading appearance of trading. So it is artificial volume, artificial trade. So the potential factors which you could see is whether you are able to establish any potential connections between the clients who get shortlisted in a lab, whether you can group them based on KYC or any other parameter you can see, like common IP or they all were onboarded from the same device. So whatever parameters were considered for alert generation, those can be assessed here as a factor for reviewing it. You can say if there's a pre-arranged synchronized deal or reversal deal. What is the impact if, for example, if it is small or illiquid strip, then even small quantity sales can have an impact. So you can assess it on those fronts. What and all thresholds have been left to the brokers, trading members, depending on the business size and volume or clients, or whatever they deal with. But everything has to get documented in the alert review and surveillance policy. When it comes to price movements, then you have to look for whether there was any unusual price movement based on the which can be attributed to the trading activity of the clients. What the timing of the trades suspicious, whether it is in and about near corporate announcements, whether it is synchronized that all the orders have been placed within a short span of time with an intention to match, or if the trading has resulted in variating the last traded price and caused significant price movement. So here also, it is only the factors which have been prescribed, the thresholds have been left to the trading members for. Front running is, like I mentioned earlier, if you're handling large orders and you find that, the time proximity is key here, you always have any other client who is coming prior to the large order and selling it afterwards, and you find that this pattern is getting repeated, and it is also resulting in abnormal profit pattern for the person who is front running the large order, then that has to be assessed. Insider trading is where you find that in a particular script, a client is trading always when there is a material announcement coming. And the trading pattern is such that if it is a positive announcement, the client will buy first, sell afterwards, or if it's a negative announcement, they'll sell first and buy afterwards. So those sort of patterns are considered to be abnormal when it comes to insider trading. And based on the KYC submitted, also some relationships can be established, whether he's an employee or associated with the listed company in any other aspect. Unauthorized trading. Yeah. It is where unusual or high volume of error account activities are there, which like for example, if it is a same mobile number tied to different client accounts, then brokers have to exercise due diligence to identify whether it is a genuine case, like a family, like in case you have family members where single mobile number is accessed. So these all factors need to be considered when you are reviewing an alert for unauthorized trading. Next is mule account. Mule account is announced accounts have been created just to distribute the suspicious trading activity amongst multiple client codes. So here the factors which to be considered is whether the reported income and net worth it has any link with the pay in and margin obligations, whether it is commensurate with the reported income. Next is if the same email ID or mobile number is tagged to different client accounts, then it is one guy who is operating multiple accounts on the same device using the same mobile number or email ID. So that is one factor which you can basis which you can group clients. So prima facie based on KYC or address alone, you won't be able to establish groups, but based on this, whether you have this same mobile number, same email ID, same device, so that you can do for the grouping. Pump and dump is where you have a significant trading activity in small or penny scripts. And you also find that there are organized social media campaigns, which is nothing but the framework for unsolicited SMSs, uh, where you have this watch list and uh, information list. And you also find that the trading pattern is such that there is aggressive purchasing from several accounts. So many of your clients, if you find that in such scripts there's aggressive purchase, then it could be a red flag for pump and dump. Order spoofing is where a person has an intent to sell and he is spoofing the buy side or vice versa. So the factors which are be considered here is whether there are frequent cancellations of the orders on the spoof side. So if they are trying to spoof of the buy side by placing large orders and suddenly they are canceling it and they also have a sell order getting executed. So that is that is to be considered for identifying cases of order spoofing. Acting in concert, where you are able to establish groups where they are either relatives of individuals as defined in Companies Act or promoters, any common directors, those sort of relationships you are able to establish, then that has to be clubbed together while computing the position limit. So there were some elements described earlier where you are looking at the position as a percentage of the open interest in the contract. So here you have to group wherever possible depending on individuals, HEF and promoters. The next aspect in the guidance note is obligation of the trading member with and its employees and internal controls. So here also it has been bifurcated into four categories. So first, for the first group, all proprietary operations have to be reviewed and a report has to be submitted to the apex body at least once a year. It is same for the second also. Third is where it is coupled, it is recommended that there should be an internal audit report also coupled with the internal review. So it is same for QSBs also. The first two, small and medium, the recommendation of internal auditor report has not been prescribed. But for the last two, the additional requirement of internal audit report is there. So at the time of onboarding and allotment of trading terminals, so there should be caution exercised at the time of allotment of trading terminals, and there should be maintenance of attendance sheet, webcam, CCTV as applicable. In the second category for medium, in addition to the caution which needs to be exercised and the maintenance of the system controls, attendance sheet, webcam, CCTV, etc., it is recommended that there should be surprise visits or random inspections. The only change in case of large and huge is instead of recommendation, this surprise visit and random inspections are mandatory. And these all should be covered in the surveillance policy. There should be an SOP with regards to who can be given the authority to operate a trading account for a given client. This is for both individual and non-individual clients. And any employee of the trading member, if they come across any case of suspicious activity or any act of fraud or market abuse, they have to immediately inform to the senior management. Now, escalation and reporting mechanisms. The quarterly MIS was already prescribed in the 1st July 2021 circular. So it has been reiterated here that it has to be submitted to the apex body on a quarterly basis. Whenever any suspicious activity has been identified, then within 48 hours of the detection of suspicious activity, trading members may, via email or through the member surveillance dashboard, they can intimate the exchange, as has been done in the case of trading alerts which are getting escalated to the exchange. So here also, it is uh, within 48 hours, you have to inform the exchange. And also on a 6-month half-yearly exchanges, you have to submit a nil report or any action taken report based on the instances which you have identified, if you have taken any action on that. Or if you have not identified anything, and then a nil report has to be submitted on a half-yearly basis. So any deviation, if it is observed from the above obligations, that has to be reported to the apex body and the stock exchanges. And how to escalate and report to the exchanges, that has been prescribed in the initial circular, wherein exchange had introduced the member surveillance dashboard, which is the May 2020 circular. The third aspect here is, after alert generation and internal obligation, who are the entities who should be surveilled? The first category which is here is the client or relative of clients, which are able to identify based on the KYC or onboarding. So first aspect here is the controls which are there for monitoring, which should be considered. And in case there are no controls, then what could be the consequence if the control mechanisms are not there? So there should be alerts which are able to identify match trades, artificial volume creation, trading activity only in penny script. So this has been reiterated from the indicative themes. So the first list was what all should be surveilled, and here who is to be surveilled. That is the only difference here. The first aspect is looking at the attributes which are script specific, trading activity, price, volume, cancellation of orders. The next is based on the client. So if the trading activity is not the proportionate with the reported income network, there should be online nudges which are giving as a sort of cautionary pop-up message which is already been there, so that the person who is entering the order is well aware that the script is already under surveillance action, or there is any other alert. For example, it's a high P, or its the price has already risen this many percentage, so this is already there. Another control was with respect to IP address. So these all can, if these controls are not there, then the type of market abuses which are mentioned earlier, that could be the potential outcome. Okay. You could have controls for verifying on a sample basis what all orders have been placed. You can call and verify. Second is if there is an email alert on all contact details change. One is for frequent changes in alert, and second is where a very old uh, email contact detail is getting changed. That could be one trigger. So that is a dormant account. So internal alert where you have got same people with the same name but multiple PAN numbers. That is one type of control you can have. And if the same bank account is mapped to multiple clients, same email, phone number, or unusual trading pattern. Unusual trading pattern has been covered in the themes for basis which the alerts are to be generated. So based on these controls, if these are not there, the consequences of potential market abuse would be unauthorized trading, fraudulent account opening, mule accounts. The next category of entities who are under surveillance is the employees of the trading members. So the controls which you could potentially have is listening to dealer calls, email surveillance, surprise visit to dealing rooms. There should be physical restrictions. For example, access to the trading floor, dealing room should be controlled. IP analysis should be done. There should be restriction on any device which is capable of communication, for example, mobile and smartwatch. This should be restricted in the dealing room. And there should be suitable internet access policies so that social networking sites or other sites through which you can communicate to the outside world, those are restricted. There could be a insider trading policy where you can sensitize them with respect to verification of trade with pre-approval, periodic training of employees. There should be a code of conduct for dealers when it comes to front running, and also the escalation mechanism where either employees can report, or if there is a misconduct on part of the employee, those also can be reported to the senior management. All access control mechanisms, dealer room, otherwise, need to be given on a need to know basis. And at the time of hiring, there should be background screening checks. And there should be a email monitoring mechanism also based on, and all this should be documented in the approval surveillance policy. What needs to be surveilled, who is needs to be surveilled, to what extent. So these all should be covered there. After employees, it is the authorized persons who need to be monitored. So you could have control mechanisms like surprise visits can be there, posing as a client. Social media monitoring should be done to check if authorized persons are misusing the trading members logo, either by offering assured return schemes or through any other mechanism. So whatever is attributed as non-genuine or abnormal, those all should be considered for as a control for monitoring. For example, if the level of pattern trading, for example, like AP suddenly goes up compared to what is usual averages, so those sort of controls can be built in. Script level and the number of clients who are mapped to a particular authorized person, calls can be made to the clients on a sample basis. The last category is grouped in one, which is the promoters and the senior manager, CEO, MD, KMPs. So here there should be a whistleblower policy in place, and depending on what extent you have email monitoring in place, so those aspects should also be get covered in the surveillance policy. Now, accountability matrix is what is at what level the obligation has been fixed. So for all surveillance activities, there should be a designated director, partner, proprietor as applicable, who shall be responsible for all the surveillance activities with respect to compliance with the board approved or apex body approved surveillance policy. What is the deviation report? Whether the reporting compliances have been met with for the actions. So those all will get covered here. And wherever internal audit report has been prescribed, so there's an obligation that internal auditor of the training member shall review the surveillance policy, and it will also record the observations and all this will get placed in the apex body also. And this is a conflict of interest where any trading member who has got more than 2,000 active UCC, the daily flow, the surveillance department is identified and a critical department, and there should be sufficient physical controls put in place. For example, a Chinese wall policy to prevent unauthorized exchange of information from the other departments. Then there was one provision with respect to whistleblower policy. So there should be a committee which should consist at least two senior members, and there should be a whistleblower redressal head also, who shall be responsible for reviewing the complaints and working under the guidance of this whistleblower committee comprising of two senior members. There needs to be a dedicated email ID where people can raise concern or raise complaints, and this all should get covered in the policy, which should be approved by the appropriate body, the appropriate apex body, and there should be a annual review of this policy conducted, which is approved by the board. There should be a policy and a framework to ensure that there's an adequate protection for the person who has escalated, that is the whistleblower. Effort should be ensured to take a safeguard that the identity of the person, whistleblower is not disclosed and he should be treated normally. From an applicability perspective, this guidance note for QSBs has already been effective since August 1, 2024. Trading members who have got more than 50,000, those got applicable from January 1st, 2025, and 2001 to 50,000 is effective April 1st, 2025, and the last category, the small, is effective April 1, 2026. So we will be open for questions now.
Yes, sir. Thank you, sir, for your detailed presentation on the subject. Now we will take up the question and answers.
So the list of questions which I've received, I've already submitted. But
Yeah,
would like
yeah.
to read out?
I think it is there.
Yeah,
I will read out, sir, questions.
please, sir.
Clarifications on 5.7.4 and 13. No
Yeah,
point.
so we will just project the circular and then we'll speak on it.
What, sir? Are you able to hear me?
Yes, yes. I'm saying that because these are pointers of the circular, we're just actually projecting the circular and then we'll speak on it, or those numbers.
Yeah, I think we'll go to next question. Definition of
wait.
suspicious transaction to be reported within 48 hours.
Suresh, you just wait.
Yeah,
We just
okay, sir.
project.
Okay. I will wait, sir. You go through that class. Yeah.
Yes. We are projecting on the screen.
Yeah. Clarification on 5.7.4 and 13.
5.4.4. हेलो, हम लोग वो टीम का वेबिनार पे है, हम बात करते हैं.
Hello.
5.4.
That is with respect to client due diligence.
No, 7.4.
5.7.
5.7.4.
5.7.4 and 13.
Okay. 5.7.4.
So any deviation in the adherence to internal controls result in this onboarding of clients with the proposed action, such deviations shall be placed before the appropriate committee, board of directors, or such regular intervals, or such deviations shall also form part of the report to be submitted by the trading member to the stock exchange. Which is applicable are required to be submitted. So we are not able to understand. So Suresh ji,
yeah,
do you understand
next question, sir? I think
what clarity?
No point, sir. Yeah.
Yeah. So just let us go to the 13 point also.
Yeah.
Because that point was pretty much clear actually. So 13 point says annual policy compliances in order to avoid a situation of members changing the policy post facto. It is suggested that the members must submit their policy to the exchange as part of the annual compliances and same may be validated during the inspection. It will also act as a repository for best practices in the market, which exchanges can use to not only monitor the surveillance, but also use the same to enrich standards for best practice. So basically, you have to maintain that policy and annual submission is necessary to the exchange during the inspection. So that's it. That's the requirement.
Okay. Next question, sir. Definition of suspicious transactions to be reported within 48 hours.
Yeah. So now there are various market abuse practices that happen in the market, right? So now, according to members, so that's why we are insisting on the surveillance policy that they can, in respective surveillance policy, they can actually frame
define
because market abuse practices you cannot define. So some indicated list we have given in this particular circular, but rest is actually interpretable and that has to be defined in the respective surveillance policy of the members.
Yeah, you mentioned in some of the cases percentage of volume, something like that.
Yes,
Okay.
so whatever could be defined, because ISF had suggested, the member body had suggested a lot of specific percentages, but SEBI said that because it is dependent on the size of the trading member, so it is left to the trading member to decide that, and they must document it in their surveillance policy and design their processes around that policy.
Okay. Do broker to create separate surveillance room like dealers?
Yeah, so actually, one of the, I think in the PPT, we had one slide where category wise brokers, we'll just project that just a minute.
I think you insisted surveillance department, if you remember.
Yes, yes.
But what he is asking is, it should be a separate room.
No, so it all depends that what kind of, obviously, there should be some kind of a Chinese policy within the members also, because some sensitive information which is there with the surveillance department should not go out. So that control should be with the trading members.
That is covered in internal controls also. That there should be physical or controls as applicable. These controls should be clearly documented in the policy. So up to what level you are allowing access to your employees to the surveillance room.
And the board of the trading member should be reasonable, or should be reasonably confident on those measures. So that's why we have left it to the board, because board is senior enough to understand the nitty-gritties, because they have been there in the market for quite a long time, and they're senior enough to understand the seriousness and the confidentiality of those informations.
Next question is, kindly elaborate on actions supposed to be taken by members for closure of alerts generated based on various theme or stroke red flag given in exchange circular.
Yeah, so same thing. So in our earlier circular also, we have said that this surveillance policy needs to specifically spell out, according to the board approved policy of the member, should spell out that which particular market abuse actually results in, and what is the process of concluding those market the alerts which are generated at the trading member, and further, for certain things, what is the action that they need to they should decide on their own. So this particular part has been left to the members to decide in the surveillance policy, document it, get it approved from the board. So because it cannot be one size fits for all. So there will be multiple types of market abuse practices, and you cannot just define a clear cut criteria, right? So that's why it has been left. It's more of a principle based. The more serious the matter, the member should have a policy of having more stricter actions in case of more kind of more serious market abuse practices.
Okay. Meaning of market abuse.
Sir, because this has been spelled out quite clearly, there have been many indicators which are given in the circular. What's market abuse? So there have been various examples given, but this is an indicative list, and we cannot have a exhaustive definition any which ways for market abuse. But we have given a lot of indications in that particular guidance note as to what exactly is, like, the one is projected right now about price manipulation. There have been certain other things about the client registration. Yes. So there are a lot of indication given in the circular itself. What is the market? What is market abuse practices?
Now, I think somebody asked what are the key indicators. I think we already discussed that. What are the timelines also you already prescribed? Whom it is applicable from where, what time? Okay.
That's already
Most
there.
interesting question is appointment of CSO for QSB. Can CEO can be appointed as CSO? How to read the word only surveillance mentioned in the summary table?
Yeah, just a minute. We will take you to the respective slide.
Yeah.
Human resources, right?
Yes.
So if you see in the second bracket, there is a so the principal officer designated director can additionally handle surveillance. So there's no specific requirement for someone to be designated as a chief surveillance officer. When it comes to large TM, there has to be a person who has a specific designation of chief surveillance officer. Last one is there should be a specific chief surveillance officer whose job is only surveillance.
And he cannot be a PO, DD, or CO. So it has been quite nicely spelled out in the circular itself, guidance note, as to what kind of the members which have lower clientele, there obviously one person can act as multiple with multiple responsibilities. But as you go and to QSBs, there has to be a separate CSO which who cannot handle anything else.
And another question is, fraudulent activity found by the exchange shall be shared for preventive measure with member and across the exchange?
Yeah, so we already do that, right? So we have this member surveillance dashboard where we circulate alerts to the members.
Wow.
And we have also indicated that these alerts are only indicative. So members need to also generate separate alerts on their own.
Okay. Okay. How should trading members handle scenarios where front-running behavior is suspected, but conclusive evidence is not, is limited rather? I mean, there's no evidence
So we
at
can
all.
understand. So we can understand that members have only one side of the visibility.
Story.
So
Yeah.
they will not have both the big order and the front runner means unless they have that. I don't think it's possible for the members to actually figure out a front running activity. However, the basic control that the member needs to exercise is about their dealing room. So what kind of people are in their dealing room? Who is where from the client order is coming? So I'm talking about not detecting front running post the trading. I'm trying to have a control before trading in the dealing room, where there should be enough restrictions about the communication of the client order to the dealer or to any other person of the trading member, and what controls the member has, so that this information does not get used for any other order being punched in, actually,
Okay.
to benefit from this information. So that's
Okay.
about it. So this is both sides. This is controls in the dealing room as well as detecting. In detecting, we can understand that because it is only one
Side.
side of the story. Therefore, there might be challenges, but at least they can be very careful about the controls to dish out any possibility of leakage of these information about the orders.
Okay. Then can large broker appoint dedicated CSO instead of appointing any of POs, DD or CO?
They can refer to this slide, actually.
Okay. Point number 7, is it compulsory to have all the controls as mentioned in this circular? Point 7.
Yeah. Point 7. So of the circular,
Point 7, is it compulsory to have all the controls as mentioned in the circular? In circular, some point 7 reference is given.
It is about what all category has to be surveyed.
Mm.
Yes.
so obviously, so these are the guidance notes. So this is one of the points which says that indicative list of entities who should be surveilled, controls, monitoring, etc. So there have been again, an indicative list has been given here, and members should have enough. Means in their surveillance policy, they should have proper documentation as to what they are doing about these entities. If at all they are doing or not doing, everything should be reasoned out, and it should be approved by the board.
Okay. Somebody prefers to have list of exchange empaneled surveillance system vendors.
Right.
Okay. Next is STR is filed within 7 days of detection of suspicious activity, after which adverse reporting is done to the exchanges. But here the timeline is 48 hours. How to comply?
No, what we are saying here is that it depends on the seriousness of that issue. If
Mm.
the issue is very, very serious, that's where we're talking about 48 hours.
Okay. That
If
means
if if
immediate
there
action should be there.
yeah, if there needs to be some more time, they can document it in their surveillance policy.
Okay. Okay.
And in the
And
quarterly,
then also the reasons why they're doing so. In fact, the the only thing that they need to make sure is that when they communicate to the exchange, it should not be an alert which has not properly been thought out, because
Mm.
there should not be a flooding of alerts to the exchange. Having said that, they can devise a policy where reasonably good alerts can come to the exchange
Okay.
as soon as possible, and then later they can top it up saying that how they have closed, concluded, etc.
Okay. Somebody would like to have how to have this IP address point of surveillance.
So,
Too technical, too much technical.
but we can answer that. So, uh, this with respect to the insider, sorry, the
IP
no,
address.
with respect to the internet broking circular as well as the mobile trading, members are supposed to collect the IP addresses. And there was a later circular which also asked members to collect the device identification.
Mm.
Now, what again, this can be documented in the surveillance policy, and what they can try to do is that they can try to see which what type of clients or how many number of clients are actually joining in from the same IP address, same device, etc. Then they can start reasoning out, speak with the clients, etc., and understand why it is so. Here, the things we are like the type of market abuse practices which we are which want to dish out is that there should not be a case that there is some unauthorized intermediary in between who is actually punching orders for multiple clients. So, or some mule accounts has been kept for by a single person, and a single person is controlling, and then that will actually lead to a market risk which the member uh, should detect, and then they should take action.
Yeah. And one more request is that uh, examples of ad hoc reporting to board and exchanges on any deviation on internal control, RMS policy, surveillance policy, AML
Yeah. So
policy, and
yes,
action
all
taken
of
report.
this, yeah, all of this should be properly documented, that they should actually categorize various kind of alerts that they generate.
No, no, no.
And
He would like to have some examples he wants to have. Reporting
so,
how it will be some.
as I said, the circular itself has a lot of examples with respect to front running, price volume, etc. It gives you enough indication based on which you can devise those alerts. Yes, for
Okay.
example, if you have an alert for reversal trading and something does not function, and you also get a show cause notice from the exchange for a trade reversal transaction, then you could look at why that trade reversal alert did not function properly. So that
Then
is
for somebody wants to
yeah.
have more
Yeah.
clarity on board MIS data and format.
The board MIS format was already given in the 48818 circular and is also given here. So it
Okay.
is, so whatever you are reporting the action, that has to be submitted. So see, there is no particular after prior approval. There should be particular format as such. Yeah. But the relevant for so here some amount of clarity is given, but members in the surveillance policy can devise in. So idea is to keep the board informed sufficiently about what's going on with the alerts that they are generating, and how they are concluding, and are they observing new patterns, and are they informing to the exchange. So idea is that.
I think most of the questions we answered, sir. I mean, we covered all the questions.
Right.
Suresh sir,
Now,
we have received some more questions on the YouTube chat.
okay.
Would sir like to answer? I'm just sending it across on your chat, sir.
No, no,
Yes.
you can read out, sir. No problem. You can
Okay.
read out.
The first one we received is for medium-sized broker. Can compliance officer or PO can take up any additional responsibility within its firm while discharging his duty for surveillance function?
Yeah, this can the member refer to this which we have spoken about multiple times? So it is
Okay,
data
okay, that's something that's already
management.
answered, I guess. Uh, Now, this is CMS certification is allowed or only NISM certification is required. A CAMS is an international certificate in the area of PMLA.
Yes, sir. So,
NISM, preferable is NISM, but they can also document in their surveillance policy why they are not preferring NISM, and the board has to approve it.
Right. So, following, we have the third question. In the circular exchange, ask TM to report suspicious transaction to exchange. However, currently we are reporting suspicious transaction to FIU, and there is confidentiality clause in FIU regulation. So he is asking to just please guide
Yes,
on this.
I understand. So, see, there is an obligation between the trading member and the FIU, right? And there is a separate obligation casted by this guidance note. So the TMs have to ensure that they keep both these things separated and also documented in the internal policy. And so you need not mix the two. What I'm trying to say here, we are mostly concerned about market abuse practices, the market risk type of activities, and maybe including market risk. FIU may be more interested in layering, etc., the other parts of PMLA Act. So they need to have everything documented, that what they will report to the exchange and what they will report to FIU. They need not exactly report what they have reported to FIU to the exchange. However, to the exchange, they need to be more concentrated on the market abuse practices that we are trying to insist again and again.
The following question, what we have is it mandatory to restrict mobile access to all dealing room, or restriction in institutional desk is fine?
So idea is that you should have enough controls in your dealing room or in your surveillance room, whereby which you can ensure that no sensitive information is being leaked out. So that's the main principle behind which you can have your controls.
The another question which we have is active clients means trader clients or UCC status active clients.
So you can define in whichever way format the client who are active and they can place orders. That's what we are looking at.
We have just other two more questions. Who can be whistleblower redressal head? I think you've answered this question, Brett, earlier. Just explain the presentation. Who can be whistleblower redressal head?
Just a minute.
it was given
I think I've that's already
yeah,
done the presentation if I'm not wrong.
yeah.
It's so whatever there is in the presentation is actually the presentation is a ditto copy of the circular.
Okay.
So one has to read the circular because it's a detailed circular which is sufficiently detailed out, we feel. So if the trading members actually go through it in sufficient detail, all the questions are there, all the answers are there also.
So we have a last question for the evening. That is, QSB broker can have CSO other than CO PODD.
So we again will revert back to the same this
Okay.
thing. I do not know why it is confusion, because this is one of the things which are spelled out clearly in the guidance note.
Yeah.
And we can actually show the exact.
He can be a PO DDCO also. Yes.
So
I think, yes, sir.
let's see the circular. I think there are a lot of questions around this, but we want to actually exactly show you in the circular where is it mentioned. See, this so page number.
Human resources.
So this is which page number?
Page number 4.
So page number 4 has the exact means. It's spelled out very, very clearly. And this last column is for the QSB.
They are dedicated only for surveillance. So but he can be anyone of PO DDCO. So the designated director is only responsible for surveillance and no other function.
Okay, I think that's the end of questions. Sir, we almost answered for about 32 to 35 questions. Thank you very much, Biresh sir and your team. That I am sure that every inquiry of our members have been answered. And we this evening we have about 250 plus people connecting from various cities, and mostly they were CEOs, they were directors, they were vice presidents who had connected with us this evening.
Thank
Suresh
you.
sir, I would like you to give the vote of thanks, sir.
Yeah, thank you, sir. I think that we should thank NSE team also, Mr. Chatterjee
Surely,
and
sir.
his team, for this elaborate presentation. Okay.
Thank
And we will do one more round of such presentations, sir,
Absolutely.
so that the clarifications easily will be
Yes,
resolved. One more round we will have after some time.
absolutely.
Okay. Because April, I think the implementation, it becomes April, if I remember, 2025. So before that, we'll have in around February mid, we'll have one more
So for
discussion of.
one section of the trading member, it is applicable for 1st Jan.
Yeah, first Jan, already there.
Yes.
But others, I'm telling you, there's another category.
Right.
Mostly they feel people will fall in that category, I'm feeling.
Right.
So we will have it in February, sir. Okay.
Right.
Thank you, sir. Thank you very much, sir. Thank you.
Thank you very much, sir, and your
Thank
team.
you.
And we thank all our members who have attended this evening. Surely we're going to come up with more of webinars that's going to really excite you and edify you with more of informations. Thank you, one and all, for being with us
Thank
this evening. Thank you
Thank
very
you.
much, sir.